Good morning. Thanks for joining today. Welcome to today's webinar covering the latest trends in methane disclosure within the U.S. oil and gas industry. Again, my name is Wright. I'm a senior manager at the Environmental Defense Fund. I'll be today's moderator for our webinar. Here in action around climate, that methane is a material component. It's actively and comprehensively and methane ranking scorecard of operators. Simon Becker from CDP will discuss CDP's work on methane and provide a brief overview of the data resources they offer to investors around methane disclosure. And lastly, Logan from Ceres will discuss this year's upcoming shareholder resolution season and the numerous methane disclosure resolutions which have been filed, including most recently against Chevron. After their respective presentations, we'll move to Q&A. So because of the high number of attendees on the line, we plan to keep people muted when asked that people submit their questions via the on the webinar function. So before I hand it over to Kate, I just want to say a quick thank you to everyone for joining us today. I know it's been a crazy few days in the market, so we appreciate you being here with us today to discuss a rising risk for the U.S. oil and gas industry. Kate?
Great. Thank you, Sean, for the introduction, and hi, everyone. My name is Kate Gaumond, and I work at the Environmental Defense Fund here with Sean on mitigating methane emissions in the oil and gas industry, and primarily focusing on leveraging the power of investors and the capital markets to create that change. I've been at EDF for almost a year now and was previously working on the commodities sales and trading desk at Goldman Sachs. The report analyzes the methane reporting by 64 top upstream and midstream operators in the U.S. and finds a stark divide between those companies moving forward on the issue and those leaving their stakeholders in the dark. To start, for those of you who aren't familiar with the Environmental Defense Fund, we are an international environmental nonprofit focused on, among many things, mitigating the effects of climate change. We pride ourselves on being founded on the idea that we can use science and economics to find practical solutions to problems. And I think no example better illustrates how solution-oriented our organization is than our work with oil and gas. We understand that fossil fuels aren't going away overnight, and we therefore see it as an obligation to make sure they are developed and used as responsibly as possible. Today, I'll be speaking briefly about why methane matters, discuss the top-line findings from our new report, and conclude with dealing today is due to methane rather than carbon. The largest man-made source of methane emissions globally is the oil and gas industry. Methane is essentially just uncombusted natural gas, which leaks all the way through the value chain from extraction to the burner tip of your kitchen stove. Natural gas is often touted as the clean fuel when compared to carbon released during combustion of other fuels like coal. However, if we don't reduce the leakage rate of methane from wells and pipelines, we are actually squandering much of the climate advantage of this fuel source. Remember that these emissions have an economic value to a company as well. So any methane lost to leaks is product that could have been sold. It's the cost of the estimates that rough methane, because global oil and gas methane emissions could be avoided at net zero cost. In fact, you can consider methane the low-hanging fruit when discussing climate solutions. A constructive dialogue with companies on methane can lend itself to near-term progress, building mutual trust and creating shareholder value, especially as investors and companies are tackling what can be more complex issues. Like the methane problem is fixed, companies are leaking away much of that climate benefit and calling into question the role the fuel could play in the carbon constrained world. Be a valuable proxy for an investor to measure overall operations, reversing course on methane regulations. There are national and international to determine how a company get ahead of these future roles. Emissions and management. The answer was an industry divided in two. We percent of the companies looked at provide at least some public information on methane, and these 50% of the U.S. production of oil and gas. However, this means on the other side of the divide, over 40% of the companies looked at are silent on the issue and leaving their stakeholders uninformed on this key risk. We have 5 suggested metrics for companies to report on baseline disclosure. Of the 50% of companies that are reporting information on methane, almost half are reporting at least 3 of these, 27% with the 3 minimum, of 40% who report nothing, even further highlights the divide in distribution of companies and how much they report. I also found these that are reporting. EDF conducted a similar analysis of these same companies in 2015, and you can see that the percentage of companies reporting on the 5 baseline metrics is actually improving. Most notably, 4 companies now report quantitative methane reduction targets, and that's up from 0 in 2015. Furthermore, companies are starting to report more qualitative narrative information on their methane management strategy and innovation. The report goes into details on many of these, but I'll give a few examples. ExxonMobil writes about its personnel training program focusing on methane emissions for some of its subsidiaries. Shell reports on technology pilots of new continuous methane monitoring. So to put shortly, what we found is that investor engagement really works. Beyond these larger trends, The body of our new report goes into detail on what type of information these companies are reporting and why these different metrics matter. The report does deep dives into often thorny subjects like voluntary initiatives and uses of direct measurement. The report also concludes with company-by-company analysis, so investors can assess these details for their own portfolio companies individually. So what's next for methane reporting? We conclude with 3 recommendations. The first being for you all, investors. Investors have the opportunity to use their powerful voice to improve methane emissions reporting. It took years for companies to start reporting on carbon, yet look at the progress made on methane reporting in only the past 2 years. To continue effectively managing methane risk in our own portfolios, we encourage investors to maintain the momentum they've already created and try and broaden their engagement where possible. Furthermore, investors can find targeted ways to expand their engagement to more midstream and smaller cap companies to close the divide between reporters and non-reporters. We hope you can leverage this report and other materials like the EDF+PRI Investor's Guide to Methane for constructive conversation, because investors can play a key role in closing the disclosure divide, incentivizing companies for our second and third recommendations, nailing the basics and raising the bar. The first being nailing the basics. Companies across industries should report on the 5 baseline metrics at minimum. Most notably, we need more methane-specific reduction targets. Non-reporting and reporting companies alike can achieve this baseline level of reporting to begin addressing methane risk across the industry. And secondly, raising the bar. Industry leaders have the opportunity to raise the bar on methane reporting going forward. Robust reporting on methane management can go well beyond basic metrics, and comprehensive reporting going forward will have information to allow a company, its shareholders, regulators, and peers fully assess commitment, action, and performance over time. So with thoughtful action, industry and investors have the power to close this disclosure divide. We hope you all will have a chance to look through our report, and as Sean mentioned, please submit any questions you have into the questions box, or feel free to reach out to Sean or myself. With that, we'll take it over to the disclosing the facts.
Hi, everyone. This is Stephen Heim for Boston Common Asset Management. I'll start off with the next slide, please. Yes, I'm a managing director at Boston Common Asset Management. We're a global investment manager focusing on 100% on ESG or sustainable investing practices. And I'm a co-author of the Disclosing the Facts report series, along with Danielle Fugere of As You Sow, will be the Boston Common Apache engagement on hydraulic fracturing actually led to the drafting of the Extracting the Facts, an investor guide to disclosing risk from hydraulic fracturing by the Investor Environmental Health Network and the Interface Center on Corporate Responsibility. It's based on 12 core management goals and the practices to implement them, indicators for reporting progress or key performance indicators, and we also included examples from 17 practices. Of extracting the facts with companies, investors, and NGOs that refined our understanding of the key risks and industry best practices. Next slide, please. Danielle?
Good morning. I'm sorry, I was on mute. My name is Danielle Fugere, and I am president of As You Sow. We represent shareholders across a range of issue areas. So as Stephen was saying, our based on these negotiations, our Disclosing the Facts scorecard emerged, and it scores the top US and Canadian companies in each major practices areas. Next slide. So the wider Disclosing the Facts scorecard reviews company action on reducing use of toxic chemicals, water and waste management, from reducing water use to managing waste responsibly, reducing a range of air emissions from NOx to methane, reducing community impacts, and management and accountability. Next slide.
And you can see the range of the company scores each year of Disclosing the Facts to 2016. You also can see how many questions were in each year for drawing a comparison. But over the years, since we first began issuing the scorecard, the disclosure by many companies has jumped significantly as the higher reporters race to improve their scores.
And our DPF report highlights local reporting, since company actions often differ from site to site, and this is because of different local conditions, but also differing local regulations. So we find it important to look at what these companies are doing locally. Next slide. So on this year's Disclosing the Facts scorecard, we chose to conduct a special report on methane due to the important role methane emissions play in climate change. And this report builds on the methane questions in DTF 16, but adds additional questions. And our goal in this highlighting methane is to promote improved methane management and reporting practices amongst the oil and gas producers. Next slide. As Kate contributes over 31% of US emissions, so it's an important sector. And while we think, I'm sorry, go back one. While the entire natural gas.
And so as Danielle noted, the report focuses on methane, and we also focused on 28 oil and gas companies. And these were the same companies that we reviewed and analyzed in our 2016 report. Other important points on methodology is that we reviewed all global upstream operations, not just methane emissions from hydraulic fracturing. And we had Next, the particular KPI or question where companies earn the most credit was reporting the type of leak detection methods that the company used, such as on-site observations by field staff or the use of infrared camera technology to identify methane leaks. And we found that companies were less likely to specify how often and where within their facilities they use such methods, especially with regard to the use of monitoring equipment.
The least answered question was whether companies had adopted a quantitative methane emissions reduction target. Only those companies participating in the One Future Coalition have set targets. So those are the 4 that Kate mentioned. We hope to see this number increasing significantly in the future. We note that monitoring data on methane emissions is still very much a work in progress. Most data reported on methane emissions is based on engineering estimates rather than true measurements. And among other problems, this fails to capture the super emitter problem of large leaks from random equipment that recently has been identified. To capture such leaks, we believe that monitoring more sources more frequently in companies' leak detection and repair programs is important. Fortunately, the industry's increased focus on methane emissions management is driving development of new monitoring technologies, from continuous monitoring equipment to measurements from drones and airplanes. Many companies have joined together in studies on measuring and monitoring methane emissions, and we are currently seeing many new technologies in pilot studies. So we look forward to this continued development. Next slide. So that concludes our presentation. Thank you all. And if you have any questions, we're happy to answer them, either on this webinar or feel free to email us at the addresses shown here. Now I will hand it off to,
one more thing I'd add too is just you can download the full report at disclosingthefacts.org. Thank you.
Thanks. And now we'll hand it off to Simon Fischweicher of CDP.
Thanks, Danielle. Again, my name is Simon Fischweicher. I manage CDP's corporate disclosure engagement team in North America. Our team and CDP generally works across all sectors globally, as well as cities. However, I specifically manage relationships with the oil and gas industry, including those companies who disclose to CDP, as well as companies, perhaps some of the laggards who might not be disclosing at this time. Following the overview of the analysis discussed by the teams from EDF and Disclosing the Facts, I've been asked to provide a quick snapshot of trends in methane disclosure specifically through CDP's questionnaires, as well as some updates on methane disclosure metrics for CDP's oil and gas sector specific climate change questionnaire, which we've launched this year. Next slide, please, Kate. Thank you. For those less familiar, CDP, formerly the Carbon Disclosure Project, collects environmental data through questionnaires on climate change, deforestation, and water from over 6,000 companies globally across all sectors. And this is done annually on behalf of over 650 investors, including folks like Stephen Heim and Boston Common Asset Management, shown above, and 99 organizations, including the U.S. General Services Administration, pointed to below, who engage suppliers through their CDP supply chain program. CDP data also powers initiatives like those along the left, such as Climate Action 100, We're Still In, America's Pledge, which are driving U.S. non-state actor on climate change and areas such as methane mitigation. Finally, CDP data is pulled into various ESG data portals, research and analysis, including but not limited to MSCI ESG Research, the Bloomberg Terminal, and of course, reports like those today, such as EDF's Disclosure Divide discussed earlier. Next slide. So what sort of trends were evident from oil and gas companies who do disclose to CDP? First, as my colleagues in the last two presentations have alluded to, there is quite a lot of room for growth in oil and gas disclosure from U.S. operators generally. Out of the 108 oil and gas companies globally who publicly disclosed to CDP, only 16 were from the U.S. However, of those companies who do disclose to CDP, 2017 saw an increase globally in methane disclosure. We saw 2 additional companies disclosing on leak detection and repair from 2016 to 2017. However, perhaps more importantly, if you dig into those responses, you'll find an increased detail on the frequency of inspections, the scope of coverage of those programs, and the methodologies utilized. We also saw 10 more companies reporting on their methane emissions rate, providing an important benchmark for their investors and other stakeholders. And a jump, as I think a number of presentations have now alluded to, in the companies disclosing methane targets. This is evidence of the success of investor engagement on methane disclosure and action. However, there's still room for growth, evidenced by the disparity between the number of oil and gas companies disclosing to CDP, that 108 figure, and then those reporting against key methane metrics. Next slide. So one update coming from CDP that could be helpful in closing this gap is the introduction in 2018 of a scored oil and gas sector-specific climate change questionnaire with oil and gas sector-specific metrics, including those related to methane emissions. Key scored methane metrics for 2018 will fall across 2 categories that I've outlined on this slide. First will be the incorporation of questions from our previous non-scored oil and gas supplement to the sector-wide climate change questionnaire that many on the line may be familiar with. These questions include questions on the use of leak detection and repair, and specifically details on the scope of coverage, frequency of inspections, and methodologies such as infrared cameras utilized. In addition, we'll be carrying over metrics around quantitative methane figures, including company methane emission rates for upstream, downstream, and chemicals, business divisions, as well as breakdowns of absolute scope 1 methane categories such as fugitive, venting, flaring, and process emissions. And finally, we'll continue to ask companies to set methane reduction targets, and for those companies that are not setting methane reduction targets, ask them to provide the rationale for that decision, as well as plans for setting those targets in the future. The second group of questions are those that are aligned with the recommendations from the Task Force for Climate-Related Financial Disclosures, or TCFD, as I'm sure many people are familiar with that acronym. And these include, but are not limited to, the disclosure on climate-related scenario analysis, which likely should include a discussion of methane management, particularly if an increasing portfolio of natural gas is part of a company's low-carbon transition plan. Another new question CDP will introduce is on investment in low-carbon R&D equipment, products, and services. This will be an opportunity for companies who are investing or planning to invest in areas such as methane detection, reduction equipment, and technologies to provide details on those investments or planned investments. Finally, and important here in the US is CDP's policy engagement section, where investors can see whether or not companies are disclosing on their engagement in policy either directly or through trade associations. This could include methane reporting and reduction policies at both the state and federal levels, and companies should also be disclosing their position on those policies. These questions will be scored, many for the first time, which should help incentivize increased disclosure and drive further action on methane management in the oil and gas industry in 2018. The scoring methodologies for CDP's oil and gas sector specific questionnaire should be released for 2018 in March, and they will be publicly available on our website, so more to come there. Next slide. Thanks again to EDF for organizing this webinar and including CDP. And if you have further questions, please put them in the Q&A, or you can shoot me an email at the address listed. With that, I'll hand it over to Andrew Logan at Ceres and let him take over the mic.
Great, thank you, Simon. And thanks to EDF, I should say as well, not just for the webinar, but for the really excellent and helpful report, which I think is a great starting point for investors who are interested in the issue. Also a great resource for anyone who's been working on it for longer, obviously. And I would say, as an opening remark, that one of the many reasons for investors to engage on methane, besides the very compelling business case, which you've already heard a bit about from Kate and others, is that EDF is really in a position to provide strong technical support for investors who need it in these engagements. And the conversation, as anyone on this call can tell you, can often get fairly technical. So that kind of support is not always available on other issues, and has been a real help to investor work on methane. So you've already heard from previous speakers about why this is such a critical issue, both because of the potential to cause companies quite a bit of lost revenue, but I think just as importantly, or perhaps more importantly, the ability to threaten the status of natural gas as a lower carbon fuel. And as Kate said, given that many oil and gas companies have put natural gas at the heart of their long-term climate strategies, that social license is incredibly important to defend. My main message here in my brief remarks is that there is a strong track record which demonstrates that investor engagement, both by the investors on this call, like Stephen and Danielle, but also by others like CalSTRS and Trillium and Arjuna and Miller Howard, and many of the members of ICCR. That there's a strong track record that demonstrates that investor engagement on methane works, and works quite well. And that makes logical sense. I think the business case for action by companies here is pretty clear, and it's been hard for companies to argue that they shouldn't be doing more to reduce methane emissions and to disclose more about their methane management to investors. So as a result, we've seen strong votes on a variety of methane shareholder proposals. Most of the proposals have asked for disclosure around methane management, but some have asked for targets, but across the board they've gotten quite good support, with votes as high as 46% last year. And I think perhaps more importantly, we've seen a lot of withdrawals and commitments from companies. We had 10 just last year alone, and we've already had at least one this year at Energen. So engagement and shareholder proposals have led to improved disclosure. They've led to better management practices. Some of that is already being reflected in the scoring that that you've heard about on this call from EDF, but also from disclosing the facts. And I think Exxon is a really interesting case study. This is an example of where a strong vote last spring, not quite as high as some of the others, but still quite strong, led the company to make a fairly significant set of commitments around technology adoption, around emissions reduction, and even to my great surprise, as somebody who's worked with Exxon for a while, has led to them supporting methane regulation. So I think with methane, it seems pretty clear that engagement can produce real results that help reduce risk and improve the bottom line. And all we really need then is more engagement and more support. So if you go to the next slide, that's where you all on this call come in. And happily there are multiple ways that investors can support pushing companies forward on methane. Certainly you can engage on your own. There's a group of investors that meets monthly, organized by ICCR, for monthly calls to sort of talk about progress and share best practices. EDF put out a great engagement guide for investors last year, which I'd recommend as well. And beyond engaging on your own or as part of a group, once again this year there are going to be proposals going to a vote really across the whole energy value chain, largely in upstream companies, but also some filings in the midstream and with end users like power companies. So, bottom line, engagement works. You can be part of it. And now is a particularly important time to focus on this issue, when, as I think Sean mentioned at the beginning, the commitment of the federal government to addressing methane has obviously weakened. So with that, I'll pass back to Sean for the Q&A.
Thanks so much, Andrew, and everyone else for great presentations. So yeah, we'll jump into Q&A. As a reminder, please submit your questions online via the question function. I think we're seeing one or two trickle in, but please Please don't hold back with any questions you may have. Maybe while we're waiting for a few of the questions to come in, I mean, I'll start with a question of my own. Maybe I'll direct this one towards Stephen and Danielle. You know, as investors, you know, doing constructive dialogue with oil and gas companies on this topic, I was wondering if you could maybe share some color about the types of, you know, arguments or lines of reasoning that you find that, you know, resonate with companies and get companies to be more constructive about the methane issue. Is it, you know, is it an economic case? Is it a regulatory case? A reputational one? Just would love any you know, color you can provide on some of the dialogues you've had and kind of what helps move the ball forward.
Sure, I can start out. This is Danielle. We have seen through the disclosing the facts, I think the entire process and dialogues with companies, we have been able to emphasize, I think one of the important issues is social license to operate, as Andrew mentioned. So as gas increases in terms of use and companies are relying on it for greenhouse gas emissions, if we see leaks throughout the process, including in the upstream oil and gas industry, this makes it more difficult to rely on gas as quote, a bridge fuel. So I think that has been important. Economics resonates. I think these companies understand that capturing gas makes sense. It's their product. And so to the extent that they can do that, we encourage them to do so. And I think right from a regulatory perspective, just given the Trump administration, there is some blowback in terms of the industry being perceived as weakening its standards. So that's what I'd add and allow Stephen to jump in.
Sure, thank you. Want to note too that Boston Common's been organizing 1 or 2 meetings a year in New York City on methane, usually hosted by ICCR. And if you're interested in participating, send me an email. Our next one will be on Monday, March 5th in New York from 11 to 12:30. Then we'll have a meeting on carbon asset risk with about, just about 9 companies so far have signed up for that, including companies that aren't directly oil and gas producers. So that's one area that we found that have helped, having the direct discussions with companies, having several companies in the room. EDF has been a key part of the discussions. Rich Leroff of the Investor Environmental Health Network has been a rock for the years, and sorely miss him in his retirement now. And then also Andrew Logan of Ceres and Christina Herman of ICCR have all been key parts in the discussions, and also Simon from CDP. So that's been one area I think has really helped in the movement for companies internally, including having large Wall Street investors be part of the discussions. I'd say one point to think about is on the issue of targets and target setting. In one of our recent meetings in September, one company rep in particular was talking about the issue of targets and how hard it was of getting support internally for targets, but also that what happens if we don't meet the targets? Are we going to be punished by investors? And I think from the investors in the room, it was clear that no, we're more sophisticated to understand that operations change with new assets that they put in or greater production, but that we'd really want company to be having targets. And the other thing related to that is methane emissions intensity versus total methane emissions is, I think, the other thing. I think more companies are realizing they can report on intensity and show progress over time too.
And to emphasize Stephen's point on that, it is important, and I think through these dialogues, we've been able to demonstrate to companies that investors can be pretty sophisticated and understand the fact that a company, for instance, may be adding new wells or new production areas, and so targets may increase or decrease, but that they're being able to communicate that investors understand how companies operate, I think has been important.
Great, thanks so much, Danielle and Stephen. One other question that's come in is how can methane management be integrated into 2-degree scenario analysis by oil and gas companies? Maybe, Andrew, I'll kick that one to you. I know you and your team have been doing some thinking about the TCFD framework and how that can be implemented by the oil and gas industry. So maybe you can just talk a little bit about how methane could fit into that framework.
Yeah, no, it's a great question, and I think it's an underexplored area. I think there's a real need, and there'll be real value in pushing companies to think about methane as part of their 2-degree scenario analysis, because so much of sort of calculating how much carbon budget we have, either as a globally or as individual companies, depends on our methane levels. And the more we control methane, the more room there is for fossil fuels to continue to play some sort of role. And obviously the opposite is true as well, that if methane isn't addressed, there's much less room for using fossil fuels and particularly for using natural gas. So I have seen some, I guess, private analyses that have sort of compared and contrasted just a straight up 2-degree scenario analysis for a given company where methane is sort of taken into account and where it isn't taken into account. And the differences can be quite significant. So I think this is something we should really push companies to do. It's something I think that probably needs a bit more, explication to help investors and companies understand exactly what this means in practice. So it's something I think Ceres is interested in helping develop. So I guess look for more on this front over the coming months.
Great, thanks so much, Andrew. One other question that came in, are electric utilities asking for more methane emissions reporting from their natural gas suppliers? This is a great question. Maybe I'll try and take a first crack at it, and then folks can jump in if they want to. So I think the answer to that question is yes. There's actually been a recently launched initiative called the Natural Gas Supply Collaborative. It's an initiative of about 9 utilities which have come together in part due to investor questions and investor pressure about how they're becoming more sustainable, not only in their own operations, but in their supply chain. This group of utilities come together working with MJ Bradley to use their buying power as utilities in terms of natural gas to push suppliers upstream to provide better and more disclosure around not only methane, but other air pollutants, water, and other issues. They issued a very good, thorough report about the types of information they are seeking from their suppliers in terms of environmental data. So I think it's a good initiative. I would encourage folks to look it up. It's also just a helpful reminder that not only are utilities, local distribution a source of methane that they need to address in their own operations, but they do have some leverage upstream to push their suppliers to improve methane management and reporting. So I would point folks to that as one resource.
Sean, sorry.
Simon, yeah, is that Simon?
Yeah, sorry. I thought you were going to. Yeah, I would just jump in to say that a number of utilities have also joined CDP supply chain program and utilized the focus of CDP's questionnaire on value chain engagement to start sending requests to upstream and midstream oil and gas companies. So looking forward to seeing how that continues to kind of drive disclosure and action around methane upstream. So I think with those two, the MJ Bradley Natural Gas Supply Chain Collaborative, and then several utilities beginning to join that supply chain program coming together, I think there'll be some movement there.
And this is Stephen Heim from Boston Common. I wanted to follow up on the other question about the TCFD and methane. I think there are 2 parts. One is what the individual company is doing, but also in the scenario area, where if it's a scenario of not much action, as Andrew noted, the total carbon budget will be severely limited. The other area I think for methane is because it's so potent that the action that we can be doing now and the companies can be doing and the industry can be doing will free up more carbon budget for them or for, say, developing countries for operations. And I think that that's a key area that the industry isn't focusing on, of the critical importance of methane.
Great, thanks so much, Stephen. One additional question we got is about regulation and some of the regulatory uncertainty we're seeing in the U.S., particularly at the federal level, with the current administration trying to, roll back or weaken federal methane standards. Maybe I'll direct this one to Andrew. I know you and your colleagues at Ceres have done some great work getting investors engaged around, regulatory support on the methane issue and much more broadly than that. Maybe you can just comment on how are investors thinking about the regulatory uncertainty, how they're dealing with that in terms of their day-to-day decisions, and what impact is it having on engagement with companies, if any?
Yeah, it's a great question. I mean, what's particularly interesting about methane is, as we've been saying, obviously there's company-specific risk around lost revenue, but I think there's also, the social license risk is really one that's going to be won or lost at the level of the industry as a whole. So, as a company, you may be doing amazing things in your own operations. You may have a strong reduction target, and that's all great and part of the picture of what needs to happen. But if your peers aren't taking steps to address methane and the industry as a whole ends up having a very high carbon footprint, that has real implications for the role that natural gas plays in the future or potentially doesn't play in the future. So, I think, and I've thought for a while, that there's a very strong business case for companies, even companies that are doing a lot of their own, to push for and support strong methane regulation at the state and federal levels, and obviously for investors to support that as well. And we actually have seen some companies come forward. I think Exxon is the most recent example, but there have been others who have been quite active in a constructive way in states like Colorado. So there are good examples to point to of companies that are getting behind methane regulations in a positive way. And we've been part of efforts to get investors to weigh in as well. A lot of the counter argument that you hear from industry or trade associations around methane regulation is economic, is making the case that this is too expensive, companies can't do it, and so I think it's been particularly helpful to have investors in particular, counteract that narrative with their own financial message about the economic imperative of regulating methane. So, I think there's been a good story over the last couple of years of investors, both globally and nationally and at the state level, banding together to support action by the EPA, support action by the BLM, to engage Congress and to engage state legislatures around this issue. Obviously, we've had a bit of a setback with the current administration here, but no reason to think we can't make progress going forward.
And this is Danielle. Just to build on what Andrew is saying, it's clear that not only, I think it's important to understand that from the oil and gas perspective, this is doable. So this is, I think I've heard Kate say, this is like plumbing. So the technology exists, and in most instances, or in many instances, is cost effective. So that would be my first point, is that this is an industry that can make significant differences in terms of creating reductions. This isn't like getting people out of their cars. So that would be my first point. And I think second, investors understand that there are regulatory uncertainties, and as the U.S. goes backwards, what is important is getting companies to provide specific disclosures so that investors to understand which companies might be backing off in terms of methane reductions and which companies are going forward. And so the specificity of reporting is important. So we see some companies say, we've got great methane management. We take care of our methane management, but don't give any specifics. And that's where I think in an in an era where there are fewer regulations, understanding specifically what companies are doing, how they're managing, whether they're putting, changing out their pneumatic controllers, etc., whether they're addressing their compressors. That kind of detail is important to investors.
And I'd like to add one more thing. This is Stephen Heim from Boston Common. One is just a plug for the ICCR methane working group. You could email Christina Herman at cherman, that's HERMAN, at iccr.org for more information for our monthly calls. But also companies have been saying that they're going full speed ahead on making the capital investments on replacing the high bleed controllers, for example, and for doing leak detection and repair voluntarily programs. I think the main area of contention is on the reporting requirements of some of the EPA regulations that the companies think is unnecessary and very expensive, whether it be in the US or in Canada, but also on that they do believe that they will take the long-term view, and therefore they are establishing a very extensive LDAR, leak detection repair program. So I think some of the companies are going forward with the capital investments and the inspection programs. It's a question more of the reporting that they would be doing or required to do.
Great, thanks so much, Stephen. Next question is probably for Simon. It's, quote, how will investors be able to access methane disclosures off Bloomberg and from CDP beyond simply reading through a full survey? Simon, maybe you can comment on, can folks access the CDP data through Bloomberg? What are the best ways for people to get a hold of all the rich data that you guys have?
Sure. And one thing that we've actually had a conversation with Bloomberg about is potentially bringing some of those data points into the terminal. At this point, the CDP data that's pulled into the terminal is just metrics that are consistent across all sectors. But as we move towards a more sector-specific model, that'll be an ongoing conversation. But at this point, those metrics haven't been pulled from CDP into Bloomberg terminal. I think one thing that we can do is, if there are investors who are interested, kind of highlight which questions are the methane specific questions or key methane metrics within CDP's new oil and gas sector specific questionnaire. And we can communicate that through Ceres and ICCR and the other groups who are engaging with investors. I think EDF and PRI's guide in the past was really helpful in terms of highlighting what those metrics were. It is part of the broader climate change questionnaire that includes questions on overall CO2 emission reduction activities and governance and risks and opportunity assessment, all of which can pertain to methane emissions, but isn't specific to methane. So the questionnaire itself is now up on the website, and if you have questions specifically about which questions are pertaining to methane, you can shoot me a note, but also we'll be working on creating kind of more specific materials to highlight which questions are pertaining to methane. Hope that
Great,
answers that.
Yeah, that was really helpful, Simon. Thank you for that. So see, we're about time. We're about a minute to noon East Coast time, so I thought we would just wrap up here. Let me first start by thanking all the co-panelists for doing great presentations. Really appreciate the time, and thank you everyone for joining. I know it's a busy day in the market, so really appreciate getting out of your time to talk about what's a very important climate issue. We will follow up with the attendees and send out these slides if folks have them, and people should feel free to follow up with EDF or any other folks on the line with any questions you might have about methane or whatever is on your mind. I know EDF and the rest of the people are happy to be thought partners and help support your work, which, as Kate noted and others, really is driving impact. So always want to be a resource for folks engaging on this topic. So thanks again. Great call, and we will all talk to you soon. Thanks. Bye.